May profits be upon you. Nobody, and I mean nobody, miss these videos more than me. Why? Because it's the only time I get to talk and interact with my peoples, my viewers, my subscribers, my followers. I miss you. Now, with that being said, I want to hear from you in the comment section. All right. Let me know how your trading week went last week. All right. I didn't have my guidance out there, and I'm wondering if what you've learned, if you learned anything, if there was anything worth learning from my videos, if that carried you through the week. I'd like to hear about it if you don't mind. All right. And or where I came up short because I didn't put out videos. All right. If you're mad at me, I don't mind hearing from you either. You know what I'm saying? I'm trying to make up with you right now. All right. Let's get down to it. We're going to take a look at pound USD, pound USD. All right. First, we're going to take a look at the old RT money meter. It tracks the rate of change over a 15-week period of each individual currency future, the futures of the futures, the currency futures. Okay, and we can see who's strong and who's weak, and we'll put those two against each other. Now, with the pound and USD, I picked for these reasons. One, USD. Look, last week it was at 8.09. That was the rate of change, right? It moved to 9.41. It actually is trending to the upside, getting stronger. It was a surprisingly strong week for the USD, in my opinion, because I was looking for some pullback. That pullback was rather shallow. And then it started to surge a little bit. All right. And the pound, on the other hand, was last week at minus 8.63. And this week it's at minus 9.32. It is trending in the other direction. Aha, those are my favorite types to put together. All right, because those give higher probabilities of success on trades, right? So we're going to take a look from the top down. We'll go as high as the weekly. All right. Oh, I mean, we could take a look at the monthly real quick. All right, because I'm not going to spend a whole lot of time. This month, that month, we had this 1 month of pullback, right? Where buyers came in for the month. And then the next month, we filled that whole wick. We filled that whole wick all the way down. I want you to look over here to the left. See this big old wick here? We are filling that wick. Slowly but surely, we are filling this wick. And I think we're going to go, we got more downside action to come. All right. There's still half a month left. All right, but after 2 weeks, we already took the low of the previous month, filling that wick. All right, that's something worthy of note, right? On the weekly, you can see that price is doing nothing but taking out lows. All right, we take out the lows, we set a low, pull back, and then break that low. Pull back and then break that low. I had a nice impulse to the downside here, bearish impulse. We had that pullback, and then we broke that low. Then we pulled back, and then we broke that low again, and we are slowly just heading on down, grinding down. And that seems a little more obvious with the PA. If we look at the PA, the price action on the daily, I want you to see this. This is how price formed this area where you would call support, right? Supply and demand traders will look at this as demand, all right? Cleanly so. And you can see from this candle, from the last bearish candle to these bullish candles here, you can see price traded back into the range of this bearish candle. You know, I always take a look. I always mark my zones this way, all right? But when price trades back into it, we're going on down. We break it down to the threshold where it price broke the close of the previous candle and came all the way up, right? So we have this demand here and price is working its way down to it. All right, here we go. Now, where's our breaks of structure? All right, we can see them obviously here. This is swing structure. I just want you to make note. I'm looking at swing structure. I'm looking at the lower low to the lower high. All right, then the lower low, then the lower high. I'm looking for the pullbacks, right? I'm looking for the trend. And that's the important part. As soon as we break this low, we have a new lower low, we have a new top of the range, and we're looking for price to give us the bottom of the range as soon as it settles down, right? But this is the trading range, and that's what we're in. The reason why that's important is because I look for price to, if this price just continues to go up from here, all right? It looks like this is the bottom of the trading range, all right? And I divide that trading range into an upper and lower part, the premium prices and the discount prices. All right, once it reaches past the 50% mark, this is where I would look for shorts. In a downtrend, I'm going to look for shorts once price enters that premium area. Okay, and that's why I want to see if the low of the trading range gets established. All right, and so I can look out for that pullback, because the higher time frames dictate what the lower time frames are going to do. We can be in a downtrend on the higher time frames, and on a lower time frame, say the 1 hour, we're in an uptrend. All right, but I know that uptrend is only going to that area above the 50% mark of the higher time frame structure. And that's where I'll be looking for shorts. Even on the 1 hour, I'll look for that confirmation. So I'll look for a zone like so, all right, where this 4 hour supply coincides with a 1 hour supply within this 4 hour supply. Then I'll go down to the 15-minute for a confirmation. All right, a 15-minute zone of supply within the 1 hour, within the 4 hour. Got it? And then I'll look for an entry for a short on the 5 or 1 minute time frame, but that's a whole different thing. All right, so let's go to the 4 hour. Why did you let me digress like that? Because that just added like 2 minutes to this time. I'm sorry. All right, so on the 4 hour, what am I looking at? I'm expecting price to continue down, and I want you to take a closer look at this. I marked this daily zone of supply here. Should have mentioned that here. All right, I marked this daily zone of supply here. Push. This is where the buyers came in, right? Closed, and then we have the aggressive sell-off. This is where I'm going to mark my zone, right? And so I go to the 4 hour, and what we have is price broke the low, broke that structural point. All right, this is an external low, all right, not an internal low. I'll explain that some other time in another video. But the deal is we're making lower lows. We're grinding down lower and lower, right? And what I'm going to expect come Sunday open, right, is maybe these wicks here will provide liquidity for the open. Maybe price comes up here to take these wicks out, all right? And we'll see price respect the supply here. We'll mark it, okay? So this is really what I'm looking at, all right? All right, we have a supply chain forming. All right, I like to see 2 to 3 supply chains form. So I'm not looking to take longs until price shows me something up here from a swing perspective. Okay, if once price breaks actual swing structure, all right, swing structure, the lower low, the lower high, the lower low from the higher time frame, that's swing structure. If price breaks that swing structure, that's when I'll start looking for buys. All right, from a swing perspective. All right, that I'll know that the trend has changed once we start seeing supply fail. If price takes out this high, that means this supply has failed. And I would be looking really from a intraday trading perspective. I'll be looking for the demand that formed here before that took out this zone of supply. I'll wait for price to come back. That's when I would take a long. Okay. Same thing here. If I see price break that, let me get rid of this. If I see price break that this supply zone, take out this high. Once I see a break and a close below this high, I'm going to wait. I'm going to look for a price where it had left, where the last demand zone was, and I was looking for a buy from there, a flip, if you will. All right. So come Sunday, I'm looking for price to quite possibly take out these highs for liquidity, and then give us a trade to the downside from up here. I would like to see it happen here. And as soon as price hits this zone, I'm going to the 15-minute so I can look for my confirmation entries. All right. And what did I just finish telling you what it was? All right. I'm looking for a 15-minute zone within this 4-hour zone. Okay. I don't usually go to the 1 hour, to be honest with you, but you can if you'd like. All right. I go from the 4 hour to the 15. I look for that 15-minute zone. I'm looking for price to go up in there, break structure to the downside, return to impulse, respecting this high. And that's where I'll take my short. And I take my entries on the 5 and 1. So that's my breakdown. I'm hoping that you understood everything. I gave you a bunch of information and you're like, what are you talking about, man? So price could come up here and give us this, because that's what I'm looking for. And my target would be down here. All right. Doesn't mean it's going to make it down there next week, but at least I'm looking for at least breaking that low so far, but this will be my ultimate target. Okay. And this is, so that you can see it, is down at 1.16318. Okay. Yeah. Now, in the case that price gaps, and there's a chance that it could gap up, I'll be looking for a confirmation entry up here to take a short, but it has to sit up. You know, you just don't jump in the shorts just because it hit a zone. All right. It has to set up. All right. I will see you in the next video. Thank you for watching, and do check out the futures analysis I'm putting out for all of the individual currencies, so that I can kind of break down this RT money meter update. You know what I mean? We can take a look at the US dollar futures, the CAD futures, the Swiss futures, and all that. Just look forward in your next video. I'll see you in the next one. Thanks again.